For more than half a century, one man, sitting in a quiet office in Omaha, Nebraska, basically wrote the book on what it means to invest. Warren Buffett. He's the guy who turned patience into a superpower and a failing textile mill into one of the most valuable companies in history. But the world he mastered, well, that world doesn't really exist anymore. So, that leads us to the big question we're tackling today. Is his whole philosophy a timeless guide we can still use, or is it just a relic, a fascinating piece of history from a world that's already gone? Okay, so let's get into it. We're going to take a journey from Buffett's old-school world of paper reports and quiet contemplation in Omaha all the way to the new market, a chaotic place filled with algorithms, high-speed trading, and stocks that become sensations overnight because of a meme. We're talking about two completely different realities. To really understand this clash, we first have to crack the code that built his entire empire. So let's break down the core principles, the absolute foundation of everything Berkshire Hathaway stands on.
It really all starts with this one idea: intrinsic value. The question is simple. What is a company actually worth? I mean, if you just stripped away all the hype, all the fear, all the day-to-day noise of the market. This isn't about looking at stock charts. It's about digging deep and figuring out a business's true underlying worth.
And this next idea builds right on top of that. It's called the margin of safety. Just think of it like a safety net. If Buffett does his homework and figures out a company is worth $1, he's not going to pay $1 for it. Nope, he wants to buy it for, say, 60 cents. That gap, that 40-cent cushion, that's his protection. It's a buffer against bad luck, unexpected problems, or, just being wrong.
And that brings us to another one of his famous ideas, the moat. A moat is just a powerful, lasting advantage that protects a great business from its competitors. It's like a castle's defense. For a company like Coca-Cola, that moat is its brand, known all over the world. For Apple, it's that sticky ecosystem that keeps you buying their products. The wider the moat, the safer the investment.
So here's the crucial part. Buffett's real superpower isn't about making flashy, risky bets. It's compounding. It's like a small snowball at the top of a very, very long hill. As it rolls, it just quietly picks up more snow, getting bigger and bigger and bigger. This isn't about getting rich quick. It's about the slow, steady, and frankly, unstoppable power of time.
Pretty simple ideas, right? And he just repeated them for decades. That patience built an empire. But the game today is completely different. And the world we live in now tests that patience in ways he never had to deal with.
I mean, just look at the difference in speed. It's unbelievable. Buffett might take weeks, even months reading and thinking about one decision. Today, AI-powered algorithms execute trades in microseconds. That is literally faster than you can blink. The market now moves at the speed of light, while Buffett's strategy moves at the speed of human thought.
And then, this happened. The whole meme stock revolution. A wild phenomenon like GameStop came along and proved something that was pretty shocking, that a scattered army of everyday traders, armed with nothing more than smartphones and a sense of humor, could actually overpower giant billion-dollar Wall Street funds. This had nothing to do with intrinsic value. This was a rebellion.
And this whole new world is being fueled by a crazy combination of new forces. You've got cryptomania, where fortunes are made and lost literally overnight. You've got zero-commission apps that have turned investing into something that feels more like an addictive game. And behind it all, you have AI-driven trading that's completely changed the rules.
In the middle of all this insanity, it's worth just taking a breath and listening to this one classic piece of wisdom. The stock market is a device for transferring money from the impatient to the patient. That single idea is the perfect opposite to the high-speed, high-anxiety world we just talked about.
Okay, so everybody loves to talk about the brilliant companies Buffett bought. But what if we're looking at the wrong thing? What if his real genius isn't in what he did buy, but in all the massive, culture-defining crazes he had the discipline to just say no to?
I mean, think about the kind of discipline this took. He famously refused to get involved in the dot-com bubble, and he took a ton of criticism for it, right before $5 trillion of market value just evaporated into thin air. He saw crypto and the meme stock frenzy not as the next big thing, but as gambling, and he simply refused to play the game.
And his whole reason for staying away came down to this one incredibly simple but powerful rule: I don't invest in things I don't understand. It's not that he was anti-technology. It's about having the discipline to only play the games where you actually have an edge.
Which brings our two worlds crashing back together. So in an age that's totally dominated by algorithms and the need for instant results, what part of Buffett's philosophy is still standing? What might actually be the last real advantage we humans have?
You know, Buffett has always said that investing isn't really an IQ test, it's a test of temperament. His greatest skill isn't that he's smarter than everyone else, it's his emotional stability. It's that uncanny ability to stay calm and rational when everybody else around him is either panicking or getting way too greedy.
And this contrast captures the modern world perfectly. So much of the market today runs on FOMO, the fear of missing out. It's what drives bubbles and bad decisions. But Buffett, he operates on JOMO, the joy of missing out. He knows that avoiding a stupid decision is just as valuable as making a smart one. When it's all said and done, his legacy was built on a lifetime of these disciplined habits. And this quote just nails it. The chains of habit are too light to be felt until they are too heavy to break. His success wasn't because of one big, flashy decision. It was thousands of small, smart, consistent decisions made over decades.
And so that really just leaves us with one final thought. He taught an entire generation how to measure true value, not just temporary noise. And in a world that's completely obsessed with what's happening in the next 5 minutes, maybe the most important question his legacy leaves us is this: what would you value if you were building something to last for the next 50 years?